What does it mean to be here at the Astana Economic Forum for an expert like you?
You know that I think that these gatherings are important in the sense that they bring people together from government, from the private sector, or sometimes from the academic community for a debate about economic policies and priorities. I guess the focus in this forum is Central Asia.
Yeah.
I think it's a particularly interesting time to be meeting to discuss basically what are the economic and social priorities over the next 10, 20 years, against the background of the financial crisis of a few years ago, right? The global economy is still recovering from that crisis. It is constrained in ways that are new to us. For instance, levels of public indebtedness today are much higher than they were in 2007 before the crisis. And so I think it's a good opportunity to have an informed debate about priorities in the Central Asia region.
In how do you think does the U.S. economy have to do with the current crisis in some parts of the world?
The response to the crisis in 2009 and thereafter, not only in the United States, but in the European Union, in Japan, and many of the large emerging markets, was basically, for the public sector to step in a big way through all kinds of interventions, fiscal stimulus, bailing out of the banks, and so on. And I think those measures were effective, and they basically helped us avoid a much bigger crisis, which could have been, similar in nature to 1929, 1930, the time of the Great Depression. Although that response was effective, what has happened in many of the large industrial countries, including the United States, many of the members of the European Union, other large emerging markets, is that because of the interventions, because of the fiscal stimuli, public debt is much higher today than it was 10 years ago.
Right.
And this is a concern, especially if you think that there are still vulnerabilities in the financial sector and that we could have another crisis, 3, 4, 5 years from now at some point, with levels of debt that are 2, 3 times higher than they were in 2007, the scope for interventions in the next crisis is going to be much more limited, and that is worrying. It is actually something that concerns many people.
But how do we tackle then this debt, the high public debt?
Well, I think that what we need to do is what is called fiscal consolidation. Governments need to put in place measures which allow us to gradually reduce the levels of public debt to more sustainable levels, right? And the recipe is going to vary from country to country depending on the circumstances. There are countries where, for instance, the social security system is not sustainable, where the government is not going to be able to fulfill its obligations for pension and medical expenses and social security and so on in the longer term. So they need to start taking measures now in order to prevent a crisis from emerging 10 years from now. In the context of aging populations, the world is becoming grayer, and we need to make provisions to deal with the impact of aging, 10 years, 20 years from now. It may involve, for instance, increasing the retirement age. Some countries are already doing it. Germany has increased the retiring age to 67. It's something that we can do.
That doesn't suffice, no?
Well, you have to do it little by little, It's not something that is politically popular. People don't want to be told that you have to work until the age of 70, right? On the other hand, because of improvements in medicine, because we are eating more healthy, because we are exercising more, people are living longer. Average life expectancy today is the highest that it has been in many years, probably many centuries, right? In fact, we don't know any period in recent history, let's say the last few thousand years, where average life expectancy was higher than it is today. Therefore, it should be possible for people to work longer and to be economically productive longer than 60 or 65, which is the typical retirement age today.
But what do we do with the youth?
Well, you have to train the youth, you have to educate them, you have to give them skills that are going to allow them to find jobs in an economy that is changing and that is becoming growingly complex. There are parts of the global economy that are constantly shrinking and disappearing, and there are parts of the global economy that are booming and that are expanding. And this structural shifts in the nature of the global economy require a very active policy on the part of governments for development of skills and training, especially of young people. We have to empower young people to have the skills so that they can find a place to work in an economy that is expanding and transforming.
Would you plead for some kind of a public-private partnership?
I should think so. Yeah, I think that there is a scope. I think that the private sector is already heavily involved in the provision of educational goods. I think more of this can be done, of course, as well. I like to emphasize in particular higher education, because we have already made quite a bit of progress at the lower levels, elementary, secondary. School enrollment rates, even in African countries, are already quite respectable. But where we need to make further progress is on the higher education side, because that's the cutting edge, right?
Yeah, that's right. Now, in view of high public debts, how do you judge the possibility of a good investment climate by the public-private sector?
Again, I come back to the issue that we need to address the problem of high public debt levels. It's not going to go away. One way in which we can address that is by creating a better investment climate which improves productivity, improves competitiveness, allows us to move to a higher growth profile. If countries are growing more quickly, the debt to GDP ratios will come down because the denominator is growing more quickly, right? We measure debt by looking at the debt in nominal terms, and we divide that by the size of the economy. If the economy is growing, the ratio will come down.